In our video here today, we're going to talk about rental properties and specifically Dscr loans and how those can differ from other financing options and how they can help your renter portfolio as you continue to build it. Hi, I'm Zach Lofton, founder of Lone Ranger Capital here in Austin, Texas. In today's video, we're going to cover rental loans, how to get them, what some of the benefits are of them, and just common questions you can ask during the process. Today, in the rental loans, we're also going to talk about Dscr loans, and those can be used more or less interchangeably. For these types of loans, there's a couple different ways you can go. The first and most obvious direction you can go is through a bank or local credit union, you name it. Similar to how you would get your mortgage on your house, this is the process. It can be fairly intensive, both with time and with paperwork. So while you will probably get the lowest rates this way, the ease of use just might not be there all the time. They're going to ask for tax returns, bank statements, credit reports, just to name a few. And typically the soonest this can take place is about 45 days. If this is a good fit for you, that's fantastic. However, they'll likely limit your relationship in terms of number of loans and then also loan size, so in terms of dollars actually lent out to you. The other side for this is what's called a Dscr loan. And this is kind of a hybrid between this bank loan that we talked about and a hard money loan. If you're not familiar with hard money loans, would highly recommend checking out our other video on our YouTube channel. It's very informational. But this will be a hybrid between the two, really. It's going to be a lot lower rate than a traditional hard money loan. However, it'll require less paperwork than a traditional bank loan, and they'll likely be a little bit more flexible and quick to suit your needs. So Dscr, what does that even stand for? Dscr is debt service coverage ratio. And all that is just a fancy way to cover or to say how much of your rental income covers the debt service or the monthly financing payments. So it's rental income divided by loan payments per month. This just ensures that you're actually running at a net gain every single month, not a loss, which would be obviously very bad. So if the Dscr was 1.0, that would hypothetically mean that you're charging $1,000 per month in rent and you pay $1,000 for financing costs. Not a great business model, however, it just helps to explain the Dscr concept. For these types of loans, they can be really great for getting a number of rental properties, especially for those of you back at home who are trying to build a rental portfolio. This is a great tool because it's going to be a lot more dynamic, a lot quicker, a lot easier to use than a traditional bank loan. With these, we also see quite a few of our borrowers, they'll actually get a hard money loan to take these projects down. So they buy a property that maybe needs a little bit of love, needs a little bit of renovations, probably something light, fix it up, and then refinance out with one of these Dscr loans. It gets these rates significantly lower, and you can usually do a 15 or a 30-year term for these. This is a really nice way to start accumulating a lot of investment properties and get that portfolio nice and big in a quicker way. So what are you going to need for a Dscr loan? Typically, you're going to need 2 months bank statements. You're probably going to need your credit score to submit to the lender, and then you're also going to need an appraisal. The appraisal, different than a hard money loan, which again we've covered in a different video, so again check that out. This will cover the value of the project as it is today, but then it's also going to cover what they think the property should rent for. And this helps to cover, if you have a rental property and you have it lent out to your mom for way too much or way too little, they'll say, hey, this is what market rent actually is. This also helps those of you who are interested in short-term rentals. Short-term rentals are a great source of income. It's a great investment. However, as you know, you don't have steady renters, and it can be highly seasonal depending on what market you're in, when you are, and just a number of other factors. So this appraisal will say, hey, hypothetically, if it was a long-term renter, this is what we can expect. And that's how that Dscr is going to be set. Thank you for watching our video here today. We hope you enjoyed it. And if you did, please like our video, support the channel, and subscribe as well. We hope to see you soon. Thank you.